First-time jobless claims are up again after slightly falling last week.
So the weekly numbers were released ahead of the much-anticipated monthly jobs report, which comes out tomorrow. 260,000 Americans filed for first-time unemployment claims in the final week of July. That is up 6,000 from the previous week. It's the third straight week that more than 250,000 initial jobless claims were recorded. Now, the latest numbers are approaching levels we haven't seen since November.
CBS News business analyst Jill Schlesinger is with us now to talk more about this. We're happy to have you here. Make us smart. Are you surprised at all about these numbers?
Yeah, and these are week-to-week numbers, so let's not get too exercised. And it is true that these are the highest numbers since last November, but I just went back into the old time machine and said, what was the high during the pandemic of weekly claims? We're talking about 250,000 here. It was 6.8 million in 2020, in the spring of 2020. So here's what's happening in the labor market. We are in a transition. We lost 22 million jobs in the spring of 2020. We've recouped those jobs. We are now seeing the job market start to change. Tomorrow we're going to get a jobs report from the government. It's going to show probably 250,000 jobs or so, which were created in the month of July. Under normal conditions, 250, great number. But what we are now seeing is job growth is starting to taper off. We were at over 500,000 a month for the first few months of the year. Then we were at about 380,000 for the next 3 months. Now we're downshifting again to 250. So I think the job market is in transition as the growth level of the U.S. is starting to slow down.
Freddie Mac released its mortgage market survey results, and it shows the 30-year fixed-rate mortgage dropped below 5% this past week. What does that mean for the housing market?
Well, it is good news because it means that more buyers can potentially enter the market. We have this terrible combination in the housing market right now where we don't have enough homes for sale, so there's not a lot of inventory still, and mortgage rates popped up to 13-year highs. Now, we've come off those higher levels, but 5%, which I think historically, if you look back 50 years, would seem great, but 5% is still a lot more than the sub 3% that we saw a year ago. So what does this tell us? It tells us as the Federal Reserve has started this interest rate hike campaign, longer term interest rates have followed. And again, what is the theme of what's happening right now? The economy is slowing down on purpose. The Fed wants the economy to slow down. That way prices can come down. We just had 50 consecutive days of prices at the pumps coming down. We are down about $1 from the peak. That's great news. Again, prices are still high relative to where we were before the pandemic. It's going to take a while. But if you're thinking, like, what do I need to know about the economy? The Fed is trying to engineer a slowdown that will help prices come down. But slowdown means that slowing down in the job market as well, and hopefully slowing prices down.
Not used to hearing you say slow down is a good thing.
Hey, slow down, you move too fast, mister.
Good to see you, our friend.
Good to see you.
Thank you so much.